All right. Are we live? Audio check. Hello, hello, hello.
I can't hear you.
We're gonna act like we're complete professionals here, and I didn't just spend the past like 2 minutes clicking between the intro and then trying to get the live trade started. So we're act like that didn't happen. Morning, everybody. Good morning. Good morning. Good morning.
So can they see my chart all the time, just so I get screen
Yeah,
awareness?
yeah. So each of
Okay.
us. So if you guys see my screen here, so we can
Okay.
flip back and forth between both of our charts. Good morning, everybody. Good morning. Good morning. Show in the chat where you're watching from. This is our first YouTube live stream, and for me personally, it's like the first YouTube on camera stream in like the past year and a half. So we're a little dusty. We decided that for the free Monday sessions going forward, we're going to try to do this because we want to kind of shift into doing something really cool in the next year or so. And you guys see a little emblem down there, Pack TV, where we show you guys how we trade using statistical probabilities and marrying it with live price. And this would be a fun way to do that. So we got Jeremy coming in first. Good morning, Jeremy. Good morning, Sylvia. Good morning, Dale. Morning, Pocket. We got TG. We got Drez, one of the pre-market live traders. We got Scotty. Good morning, Scotty. Where is the both option? Nope, can't do it. Can't do it. Only vote. You either like dogs or you're a psychopath. Either one. Good morning, Chitaki. Morning, Julie. Morning, Second. Good morning, Danny. We got Shag in the house. Good morning. Good morning. Wes. Morning, everybody. Good morning. Good morning. SN. Henry. It's so cool seeing you guys. Like, obviously, we all talk in the Discord.
Yeah, we're gonna have to relearn everybody's name.
We got to learn two sets, and then if you have a Twitter account, we got to know your Twitter handle, your Discord handle, and now your YouTube handle. Good morning, everybody. You gave Captain the spot. Now we'll be flipping back and forth. And here soon, the goal is when I get the gunship algo fully up and running, just like how you guys see Mickey's chart there, I'm going to have another screen, so we might even use Pocket for this, and we'll have the gunship running in a little mini window so you guys can see the fluctuations of it for a while as the stream goes on. Yeah, it's been a while. It's been a while. All right, should we get started here? So I'll go through a little bit of what I see, and then Mickey, I'll just hand it off to you, and then we'll just kind of war game until market open. So taking a look into what I'm doing here, and then if you guys are new to the stream, if you're just popping in, I post the analysis of everything I'm talking about here on Twitter. So if you ever want to see my analysis, I'll post that in the chat right now. I try to do this pretty consistently. Sometimes I miss it, but drop it in the chat there if anybody wants to go and see it. So we have an in statistical low of day with an out of statistic high of day. The first major reason why we care about what's the current high and low of day and what's in statistic and what's out of statistic is we normally have a high and low of day in 4 major time periods. All right. So we usually have it either between 1800 to 1900. So the first major hour of the day when the market opens. We then have the next major time, which is around 3 a.m., which is around right here, 3 a.m. to 4 a.m., this little minority portion of time. Then we have market open, 9:30 to 10 o'clock, that time period where the New York market opens. And then we have market close. So these 4 major time blocks allow us to kind of have process of elimination where if we do have a good low a day or a high day in one of those times, then what is the next available high or low to be taken? Because a lot of people, when they're trading, they're like, okay, I want to see this high be swept or this low be swept or this liquidity be swept or whatever the case may be. And all we're trying to do is put a statistic to that high or low, probable high or low being swept. So in this case here, This high that we made at 20:05 last night is an out of statistic high. We don't normally on the daily candle make the high of day at 20:05 typically. So if we use the process of elimination, if we know that this is a good statistical time to make a low of day, and then on the flip side to that, this is an out of statistic time, well, then what is live price telling us that this high could be taken? Well, live price is being accepted above first and foremost, what we like to call the P12. So we'll put that on my chart here, P12 mid. And so the P12 mid is the halfway point, this dotted line right here, of the first portion, the first half of the daily candle, which is the first 12 hours. So the first 12 hours, if you take the high and the low from 1800 to 6 a.m., this would be the P12 high, right? The previous 12-hour high, the previous 12-hour mid, and the previous 12-hour low. And why is this important? Because the first half of the daily candle, if we know that in the first quarter of any time horizon, anybody can go and measure this, the first quarter of any time horizon tends to be the high or low of the rest of that time period. So if we took the 1800 to 6 a.m. and split this into 4 even pieces, we can see that this low, this Q1 right here, made a significant low. Now, obviously today, this overnight session is kind of unique. We made a giant push up. Typically, we don't do that. Typically, we make a higher low in Q1, and then the opposite to be true in the Q3 to Q4. But if we know that first quarter of any time horizon tends to be that higher low, then what we're going to do is we're going to split this into the first half of the daily candle and then the second half of the daily candle, so that we can see, okay, well, if this daily candle is forming, if price is accepting above the first half, that's just objectively bullish. We're objectively forming a bullish candle, just like how when you guys watch these 1-minute candles form. If I go down to the 1-minute time frame, you guys will see the open, high, low, and close of a 1-minute time, and it'll fluctuate all the way back from bullish to bearish, sometimes multiple times as the life of this candle, meaning we'll sometimes do this, and then we'll come back, and then we'll come back, and then we'll come back, and then eventually we'll close. And then we'll choose, do we close bullish or do we close bearish? That's the same thing we as day traders are doing with the daily candle, is we're trying to see from a daily candle perspective, that daily candle fluctuating from bullish to bearish, and where is the highest probable fluctuation happening. So we know that this midpoint right here, if we were to watch that daily candle being created like this right here, bouncing up and down, and this is the wick right now, we're objectively making a bullish candle. This is being above this P12 mid. We're not only making a bullish candle, but we're being accepted above the first half of this daily candle. So that's bullish. And so with bullish intent, with the objective reason to make a bullish candle, well, what is a probability? What is a statistic that we can attach to where this checkpoint, this bullish fluctuation could be taken apart in? And in this case here, this high is the checkpoint. So if live price is objectively bullish, where is the checkpoint that price could most likely be bullish to? This at a statistic high of day. So then we move on to the next major point where, okay, well, if the next major time to make a high of day is around market open, which is this time right here from 9:30 to 10, this time period, this chunk of time is the next possible time to make an in statistic high of day on the daily candle. And then if we accept below, this is our next major live price action component. If we accept below, we're objectively making a high of day with statistics below that we could come and attack. Or if we keep on going to the downside right now, if we start making our way and reacting off this bearish footprint right now, and we open up the market somewhere around here, what do we have to work with? If we start getting above market open, we can now have a high that has a high probability attached to it that we can come and attack. And if we know that this is an overall intended direction with a probability attached to it, then we can take a piece of this movement, aka a cash flow portion of the overall intended move. And that is what I see today. Germany for the win.
Nice. What is this QR code that They can scan. What does that take them?
This takes us to the Discord. So we have
Oh, nice.
2 QR codes. If anybody ever sees this flashing on the screen, so the one that you guys see in the bottom right, if you scan that, take a screenshot of it on your phone, whatever, that'll take you to the Discord. Then we got another one over here. We'll flash from time to time. If you're new here and you want to see how we trade, if you want to learn how we trade, this QR code that's on the screen right now will take you to the boot camp. Sign up with the boot camp. Next boot camp is October 15th? 18th. October 18th. Yep. So that's that one right there. We're all professional.
The midnight retracement's played out, but we're on top of the midnight, so that's a trade I would not have taken, even if I got the entry, which we did get the entry, but it's just we're way too close to it.
This has been the story of my life for the past 2-3 months now.
Yeah, it hasn't been given easy midnight trades.
Yeah.
But yeah, once we confirm a direction for New York 1, I'll go in and break down my analysis, unless it decides to do it at 9:30 and we just sit here in range. We've been in a range for market since like 10 o'clock last night. Yeah, 8 o'clock last night. So we are at a very pivotal spot for me, right? And so you share my screen?
Yeah, we can flip it over here like that.
Oh, look at that smooth transition. All right, so for me, it's like from a higher time frame perspective, like I care more about a 2-step checkbox, right? Like NFP Friday and previous month 50%. If we're above both on the daily candle, then I anticipate 70% of green days and 30% of red days from the daily candle, right? And what that means is if I'm expecting a green day, right, because you get more green days when you're above NFP Friday and previous month 50% than you do red days, then I am expecting the low of the day overnight at 1800 or 03, like Austin mentioned, or from 9:30 to 10:30, right? I'm expecting that low of the day to be put in during one of those solid times, right? And then I'm expecting the high of the day to be more towards the close, that 15 to 1600 high a day, right? And then we put the close price in for the daily candle, right? And so right now we're stuck, all right? We're above previous month 50%, which is this purple line that says previous month mid, right? And this yellow box is Friday's NFP Friday, right? So we are stuck in the middle. So I'm trying to see, like, if the rumors are true that September statistics show us that September is the worst month for these indexes, right? And over the last 6 years after Jackson Hole, we've had a quarterly pullback, right? So like I can just blindly sell or I can wait, right? And the moment we get below NFP Friday and previous month 50%, then I'm expecting that we get a quarterly pullback. But when we're below NFP Friday and previous month 50%, like we're going to either get 2 types of pullbacks. We can get a quarterly pullback where we target June's lows, or we're going to get to the quarterly lows like we did in February. After we touch that, and we're going to keep heading down. And the intraday stat that I care about that is that I no longer have the edge of 70% green days, 30% red days. Now it's 50% red days and 50% green days, right? Which means I have to really weigh heavier on my intraday statistics, and I just don't anticipate a green day more than I anticipate a red day. Now it's like vice versa. Like if you go into any market, even in the February to April, like you can see 50% green, 50% red. If we go back to an actual bear market, like we had in 22, all right, let's rewind here. Right, you can see just by eyeballing it, like you get 50% green days, 50% red days. And like, so even in a bear market, when you're selling off, right, like you don't get the luxury of having a directional edge like you do if you're in a bull market, a bull trending market, right? So like right now in this month, like we're at the beginning of a new month, right? And I'm just trying to be patient with which direction, which statistical edge is the NFP Friday and previous month 50% going to give me, all right? Let's see, are we still ranging? So we'll go to the next part, right? So now, like that I have a monthly view from my statistical edge. Now I'm going to try to see the weekly, right? Everybody likes to do fractals. I like to do fractals like everybody else does, but I like to use statistics with my fractals. So like now the biggest, on the daily chart, we're solving the statistics like, are we expecting a green candle or a red candle for the day, right? Where are we anticipating price to go for the rest of the month? On the weekly, we're just trying to solve the simple problem of, have we locked in a low of the week or a high of the week, right? And so now how we do that is I use a couple of things, right? I use Sunday 18 to 1930 price, right? Whatever that zone is will equal out to this blue box. And then Tuesday 9:30 to 10:30, which will be the orange box. If we're above both of them, then I can say, hey, guess what? The low of the week is more than likely in, right? And then I can shoot for whatever targets I am from an intraday standpoint from a weekly perspective. Well, right now we're stuck in that 18 to 1930 box, right? We can see that we looked at the previous week candle, right? We just went up, like this is the footprint of the wick of the week, right? So you can draw that out. This was the high of last week, and this was the close, right? Right there, right? We just went up to 50% of that footprint, and we're trying to figure out what we want to do from this point, right? Now we can't lock in a low or a high of the week. It's too early to tell. But what I can tell you is this green box right here, right, from a weekly perspective, right, is this green box is half a 50 basis points to the downside, right? And we can see that over the last 56 weeks, we have hit this green box 37 out of 56 of the weeks, right? So it's a common target for the low of the week to come down and touch this. Doesn't mean we have to, but like I'm aware that, you know, more times than not, we have come to this green box to make a low of the week, right? And then the same thing to the upside, this red box right here, we can see like 50 basis points to the upside, right? We hit that 94% of the time. We've already hit that, right? So if we move up to 1%, right, 91% of the time we hit this, right? So now we know we still have targets to the upside that usually get hit, right? So 91% means 51 out of the last 56 weeks, right, has hit at least 1% to the upside, right? And then 1.5, which is at the start of our red box, we know that 82%, 46 out of the 56 weeks we've hit that. And then the top part of the box, which is 2%, we know is 34 out of the 56, so 60% of the time. So we know that we're just in a range and the market hasn't shown its hand yet when it comes to has the low of the week or the high of the week in form. So we know that that edge is not there yet, right? And so we are still early in the week and we're still waiting to see that weekly candle play out, right? But what we do know is this much, right? We are rejecting the 50% of last week's wick. So if we went to a weekly candle, right? This is a weekly candle. And we can see that from here to the high, we're rejecting that 50% of the footprint, or the wick, as most people call it, right? And that's what I'm referring to. From an intraday standpoint, right? Right now, I'm sitting on my hands to see what side of this we break out to, right? And so if I wanted to war game and start putting some statistics on my table, I could easily just go, hey, if I get a long, right, out of that gray box, right? So let's say we go break out this side of the gray box before we break out of this side. What would that look like? Now we see that we have 100% levels all up in here, so it's more likely that we're going to go long first and touch this P12 high first before we hit this 93% and this P12 mid, right? So let's war game that a little bit to see what that would look like. So we'd say long. And we can see that there's a 69% probability that it would be false, meaning that once we break out of this gray box to the upside, there's a 70% chance by 11:30 that we come back and touch the bottom side of this, right? So we can just say, we can go on and put false to kind of see what that does to there, right? Now we can look at our Asia targets and our London targets, right? So right now, London OU just got broken, literally. So let me update that. So that target's off the table now. Right, we can see that there's an 80% probability of Asia being broken. So we have a target below us, and that 80% majority of the time happens between 9:30 and 10:30. So first and foremost, we can see that this target right here, where it says Asia OU, has an 80% probability of getting hit between 09:30 to 10:30, right? And then if we can't hit that by 10:30, guess what? The market doesn't care about that probability. So every minute that we go after 9:30, not touching this Asia OU, this 80% is dropping, right? And I don't have the system to tell me how many percent per minute or anything crazy like that. But I do know that approximately 80% of the time between 9:30 and 10:30, we come and touch this level, right? So now let's look at it from a high day, low day, right? The one thing that stands out to us, right? This is low of the day, high day time, right? And what we're seeing with the long pause is we're seeing that majority of the time when we made this price signature where we broke outside of this box right here and then came back, we planted a high of the day between 9:30 and 10:30, right? We can see that the mode is sitting on the median at 9:30 to 9:45, right? So it's safe to assume that if we do break out to the long side, we can put a high of the day in. Now that would give us a statistical high of day. Then we come over to the left side where we have our low of the day time, and we can see that there's a low of the day statistic between 18 and 18:30, right? Looking at our low of the day that currently is in place, it is 18:05. So now we have contradicting markets, right? And here's why they're contradicting. On a normal day, right, when we have an 1800 low of the day and a 930 high of the day possibility, we know something's probably off because we're on the NASDAQ, right? And then we have not spent our 4 days range. So if we look at the last 10-day median, meaning 5 of the 10 days made this amount of range from high to low for the whole day's range, it would equal 276. Which means if we measure 276, it'd be this much, right? So if this 1800 is correct, then we know New York has to push from its current location, has to push over 161 handles to meet the daily distribution and then come all the way back. Well, that's not really a realistic expectation, right? That we move 161 handles to the upside and 183 handles to the downside, right? It can do it, doesn't mean that we're going to expect it. So we know that that's somewhat unreasonable, right? So we know that either this 1800 is wrong or the 930 high a day is going to be wrong when it comes to the long false, right? So what we can do right now is we can go on and put, from a price standpoint, our low day, high day zones, right? We can still put that in our system to track it, but we're not going to get into a mental trap that the low day and high day is in, right? So for low day, we saw that between the mode to median, right, is from 0.0 to 0.31. So we know that the most occurrence, the low of the day was between 0 and 10 basis points. We know that the median 50% of the time is at 31 basis points. So we're going to do negative 0.1 to negative 0.3. And we're going to put 1800 to 1830 because that's the most common occurrence, right? And it's going to draw a little box right here to show us, hey, you currently meet the criteria of time and price making a low day, right? Let's say we don't come back. We don't come back to this gray box, right? But we break out to the upside, right? That would make it a long true. That means we broke out one side and we were not able to meet the other side of this box, right? By 11:30. We look at our low day, high day. Let me put this in 0.5. Let me back up a little bit and put my high day just price. So 0.7 to 0.8 age, right? For long false. And we're going to put 0.9. So we know that right here is the most, if we get for a long false where we break out this gray box to the upside and then come back down, we're most likely, the most higher probability area of us turning around is going to be right here where this red box is displayed. So we don't quite make it to previous day high, but we do reach up into the previous week footprint a little bit more, previous day footprint or wick a little bit more, and then we start dropping down, right? So we know that this is, we can expect something like this, right? And this is New York 1s. So from 7:30 to 8:30 median distro right here, we can expect for us to go up, then to come down, right? And then what New York 2 does, 11:30 to 1600, is we suck in the range and we just sit here in range the rest of the day right here, right? So that's if we get a long false where we break out of this, we come all the way up, and then by 11:30, we come all the way back down. Before I move on, there's some other criteria that I want to point out for this. Right? We can see, right? We can put probabilities on when we cross, after we break up to the upside, when we come back down to cross, to touch this downside, right? Part of the gray box. We can see the majority of the time, if that's going to be the case, it's going to happen between 9:30 and 10 o'clock. So we might get a rip, rally, and roar in the beginning, right? But then eventually we're going to turn around and come back down, right? So that's that criteria, all right? Any questions about the long false scenario? Type them in the chat.
We got like a FYI, we got like a 20-second delay apparently. So
Okay.
anytime we ask anything, there's going to be like a 20 to 30-second delay between people replying.
I like this question, and I'd definitely like to know the answer to this before we move on. How long did it take Austin to find his optimal angle for his camera?
Did you see me? I was hold on here. Is this a good angle, guys? I can get it really close if we want to. I'll just like.
All right. So we just talked about the highest probable trade and what we're expecting to see, right? So let's war game what that looks like, right? We're going to say that this is the 9 o'clock hour range as we start breaking to the upside, and we're expecting a reversal. So this will be the 50% of the 9 o'clock, and then we're going to put a 9:30 box here, right? And this 9:30 box is going to represent the 9:30 1-minute candle, right? So high to low, the 9:30 candle, right? So as, right, let's say is right there. As we start between 9:30 and 10 o'clock, going to the upside, going to that high of the day zone for a long false, we will expect, because we're counter trend trading, like we're looking for a reversal. And when you look for a reversal, you need to be very diligent about like how you confirm the reversal, because if you do get the high of the day, you got the rest of the day to take advantage of it, right? You don't need to blow your account out because you're throwing all your leverage at it at one time, right? So we are a little bit more cautious when it comes to calling the tops or the bottom of a high day or low day. So we do 4 steps. And step 1, and they don't have to be in this order, they can just happen, would be get back below 930 price. So that would mean, right, as we leave the 930 into that high of the day zone that we're talking about, that step 1, we need to get back below 930 price, right? Which this green box represents the 1 minute candle of the 930, right? Step 2 is get below 9 o'clock's 50% mark, right? Which in this example is this 50% mark right there. And then because we're trying to call a top and a bottom, and we know that right here, we should make this move happen by 10 o'clock, right? It's simple, right? 10 o'clock needs to take out 9 o'clock's low. Right now, this does not mean that we have to just wait for all 4 steps. Like whenever you buy or sell a reversal, a top or a bottom, or counter trend trading like that, you never should like shoot your shot all at once. You should ease into it, right? So we're gonna say, all right, step 3, 10 o'clock should take out 9 o'clock's low. And then step 4 would be make a statistical high of that 10 o'clock hour in the first quarter, meaning we reject this 50%, we reject the 930 low, or we reject the 9 o'clock's high wick footprint, right? So and then that can confirm that that was the high of the day, right? And we can expect more lows, and then we know that our job is to sell the rips, not buy the dips for the rest of the day. All right. Now we're gonna say, dang, it's taking forever to break long. All right, now we're gonna say,
Yeah, we just literally tick denied it.
Yeah. So now we're gonna say, what if we can't do the highest probable signature and break up and then down, but we break up and we can't break this low where the gray box is, right? What that's gonna look like, and how that's gonna skew our probabilities. Well, we can select true, and we can see that that 1800 low of the day still matters, right? Right? It's still the most frequent occurrence, just like for the long falls. We can see that 0.10 to 0.21 is still the low of the day price point, right? We can see intra-day, high day, right? So that would set up for more of a like trend-like day to the upside, right? Unlike the long falls where we already saw that the low of the day and the high of the day would lead to a range one day, right? And if you don't know what any of this stuff means and this is confusing to you, like keep watching. We'll probably talk about it a lot more, or you can join the boot camp where we spend 3 months showing the statistics, teaching all the statistics, and teaching you how to build risk profiles and how to sync risk profiles with the measured move, meaning a high occurrence time, right? That's all the stuff that we teach in the boot camp, right? All right, so now we can see that for a long false, and we're expecting this kind of move right here, and the major pivot to be to the upside, and then we spend the next 3 hours to the downside. For a long true, we expect for the major pivot to have already happened between the 8 o'clock to the 8:30, and that we break to the upside, and we spend the next 3 hours making higher highs and higher lows. All right, cool. So if that's the case, if we do get a long true scenario, that 1800 is starting to stand out as a dominant lower day versus the 930 to 1030. So let's look at the other possible scenarios, which I don't think are going to happen. If we went short false, that 1800 low of the day was concreted as well. The only time that 1800 that's not the low of the day statistically is if we started selling right now and could not come back, right, and bridge to the upside, which is a possibility until, well, it can't be a possibility now because we just went long. So now we've gotten rid of the 4 possible scenarios that New York 1, 7:30 to 11:30 can do. Now we only have 2 possible scenarios, right? And we've already talked very in detail about one. I'm going to talk very in detail about the other now, right? We can see for a long true, right? If we put the probabilities from a price and time standpoint on our trading view, like we did for a long false, we can do negative 0.1, right? 1800 to 1830, right? Now we have both of the possible scenarios on our chart, and they both point to this being the low of the day, right? Now, we talked about this Asia OU, right? Having an 80% probability of being touched, but it has to be touched by 10 to 10:15. If it's not touched by then, it's not going to get touched, right? We also have this P12 mid that we can look at, right? So this becomes a zone of interest for us, all right? Right, because we have a couple of different things sitting right here. We have a couple different statistical areas that are sitting right here. First and foremost, we have P12 mid and Asia OU, right? And we already talked about Asia OU. And now we're going to talk about P12 mid. All right, we can see with the long false that it gets that P12 mid gets hit 87% of the time, and just conveniently, right? Where does most of the data show that it gets hit? Between 9:30 and 10:15. So now, not only do we have Asia OU statistics saying by 9:30 to 10:15 we should be in this location, but now we are confirming it with P12 mid. So if we're not here touching these levels by those times, then we know that live price is telling us that we don't care about these probabilities anymore, and that our job is to buy the dips, not sell the rips, right? So just like we talked about the scenario, let me put my long true high of the day. Let me put my high of the day zone in for a long true, and then we'll move on. We can see for a long true, right, we can expect end of day, high of day, right? And we can expect for us to go from 0.5 to 1.15. And then 15 to 1600. So now our day is very, very simple, right? Because it's just a 2-question test, right? It's like if we were taking a multiple choice, right, this would be the one where there's only 2 selections to choose from, not A, B, C, and D like we usually do, but A and B, true or false, right? And that true or false question is all surrounded by this gray box, right? The 7:30 to 8:30 ring, right? True would be, are we going to go with the highest probability, which is making it a long false, which means we break to the upside, we turn around somewhere within the previous week's wick, and then we make it back to the other side of this box, right? False would be that we break to the upside. Actually, from now on, when I do that, when I do the true versus false, I'm going to use false for false, right? But false would be that during the 9 o'clock hour, right after the 9:30, right? Let me change the color of this. That we no longer, we're displaying signatures that say we don't want to turn around, meaning we don't want to get back below 9:30. We don't want to get below 9 o'clock's 50%, and 10 o'clock wants to take out 9 o'clock high and lock in a Q1 low for 10 to 10:15, meaning we stay above previous hour footprint or wick, previous hour 50%, and we stay above 9:30. And that's the signature that is going to tell us to buy the dips, not sell the rips, right? So if that's the case, then our New York distro tells us that we can move 130 handles, which is right here, right, and not come back. right? So what I'm seeing, right, is if we get a long false, right, I'm going to expect the range to be between P12 mid and London OU P12 high area, and for us to range the rest of the day, right? We can go lower, but I don't expect us to go to P12 low. Like the highest probability range right now is between previous day mid, and we just have an inside bar daily candle, right? And if we can't do that, then we have the possibility of doing something like this for the rest of the day. Let's see, New York 2 is 0.41. And then our 10-day median daily range would be 276. We'd come up the previous day high, swipe it, and then range in that area, right? So that's what I'm seeing today. Over under, that's what OU means. Are we under it or are we over it? That's what OU stands for. And we just use those to pull probabilities. So the one concrete fact that we know is that this 1800 low is a legit low of the day scenario, right? And so for our job is to find spots to buy the dip, and the highest attractive buy the dip zone, right, is right here. Now let's talk about settlement, because Monday is known for settlement, right? So if we do a long fall scenario, right, we can see that that previous day mid has a 45% probability of being hit, and the highest probable time is from 10 to 10:15. We can see settlement, right? Just settlement in general, with Asia doing what it did and London doing what it's doing, and what we'll project with the higher probability for New York 1 to do, right? Gets hit 62% of the time. Now, if we want to get more detailed by day of the week, we can see that it actually increases 20%, right, on a Monday. So instead of 63, the probability of settlement goes up to 81%, and your 25% level between market open and settlement is 100%, 50% level is 93, 75 is 87, and the 100% gap fill is 81% on a Monday, right? So that is something that we definitely will be paying attention to when we're trying to identify the range, right? And then we can see Globex open is right there, right? So now we got a zone here between P12 mid and Asia OU, and now we have a zone of interest between settlement and Globex open, right? So let's go look at that Globex open. We see that there's a 67% probability Globex open gets touched. Most of the time it'll get touched between 9:30 and 10:15, just like every other probability. So that's why if we can't get below 9:30 open, we know that all these probabilities to the downside, to include these 89% and 92% right here, are just decreasing over time. So for me, my job is between 9:30 and 10:30 is to look for sells, because that's where the higher probability is, right? But if I can't find proper reversals, then I have to consider a true versus a false, and my job is to buy the dips, not sell the rips. All right.
Yeah, I think today's a cool like day to stream, honestly, because the biggest thing, if anybody's new here or just kind of like listening in, by the way, we just hit 100 live viewers. That's freaking awesome. Boom, 100. Appreciate you guys sharing the stream and stuff. Dave, you can turn off the bot farm now. We're good. No, I'm joking. But the cool thing about today is you guys can kind of see why we love statistics so much. Is honestly, statistical based trading is nothing more than just a game of deduction. What can I deduct that is the least probable movement of price, and then what can I include that is the highest probable movements of price? And today you can see that no matter if we go long true or long false, exactly what Mickey's saying, we have a really good low of day. Statistics are telling us that no matter if we go ripper to the upside true or if we go rangy to the downside false, that low of day is both within the time and price movement that it typically does for this specific configuration. And so now all we got to do is just use deductive reasoning, aka process of elimination, and say, okay, well, at market open, because the fact that we have a long false and a long true right around the same distribution of price, now the times are different, but we can now say, okay, well, at market open, if we do create this, I don't know, I have 0.5 to 0.83 for a long false. Is that, what do you have for a long false, Mickey? Because I have 930 to 10, 0.5% to 0.83.
Did you put broken?
Yes.
For long
broken
false
London.
what?
Long false, I have 930 to 10, 0.5% to 0.83.
0.83. I'm not sure I know what you're talking about. 0.83.
The distribution for high day.
Oh, okay. So I got 0.7 to 0.83 for a long false, and that's with London broken. Oh, I'm doing short false because we had a one tick wonder. So so here's what we're gonna do. Let's play a game, right? And this is gonna be worth 150K prop account, right? Austin is gonna think of a statistical based question, and I'm gonna think of a statistical based question. And in Pocket, you're gonna have to DM Pocket Aces in the Discord if you win. And then whoever's the first one to answer both mine and Austin's question correct will get the 50K. Okay. So I'll give you a couple minutes to think of your question. I've already got mine figured out. All right, so I am going to start with my question. And so we do a re-engineering session every Monday through Friday at 1600, right? Every Monday through Friday at 1600, we re-engineer, right? What is the song that I play 90% of the days during that re-engineering session? So that's going to be my question. And you might not want to type the answer in the chat till you get Austin's, because then you're just giving out the free answer. All right. So Austin, you got your question ready?
Dude, you put me on the spot. It's like asking what's your favorite song, and then you're like, let's see. Because I don't want to make it easy. That's a good 50K. Okay, I got one. Now I'm trying to figure out how to ask it without giving away the answer. Okay. All right, I got it. Because today's actually an example of this. And then we can literally take the snippet of this live stream and run it back, whether we're right or wrong. So I told you guys one of my favorite setups that Market Open does is kind of like what we're doing today, where we leave the P12 mid floating. And so I'll share my screen real quick for anybody, just for context. So if you guys see my screen, this is the P12 mid for anybody that's not in the group. And it's just, again, the halfway point between the highest and lowest that price made between 18 to 6. So this P12 mid starting at 6 a.m. has around an 85 to 87%, depending on the sample size that you pull the statistic of, around an 85 to 87% probability that by 6 a.m. to end of day, we're going to retrace this level at least once. So when this is floating like this, and when I say floating, meaning we haven't retraced it in the pre-market, what time does this statistic start to drop off before it becomes irrelevant? So that's my question. So if we break above or below market open, so in this case here, if we were to break below market open, what is the time that it takes typically? Okay, and there's a very specific time that this statistic right here drops off significantly. And so if we break to the upside above market open, by this point, we can eliminate the possibility of price even coming back down here.
All right. So with this being said, you have to answer both questions in one text. And you have to be the first one.
In the YouTube live chat right here.
Yep. So my question is, right?
I'll put them on the screen here.
Yeah, so my question was like, what song did I play during the re-engineering? At least 4 of the 5 trading re-engineering sessions that we conduct. So you have to answer them both at the same time. Same question.
What time does P12 mid retracements drop off?
It's not hooked on a fill-in, Dale. You got that wrong. You need to show up to my re-engineering sessions more. Boom. Somebody got mine right. I don't know if they got yours right.
I don't know who this is. A Hut. Oh, that's Hut's. Okay, Hut. Okay. But money in the dash would definitely be an answer if it was my question. Yes. Okay, so I see people answering my question, but I don't see people answering both questions in the same text.
Mine definitely is being answered.
Who is this? D. I'm looking at just the first message I see, and I see this one right here. D. Not like us, which is your answer, right?
Yep.
And then 1030. Perfect. So D, it looks like from my standpoint, D got both answers in the same message.
D definitely got it. Because
SN said not like us, but 11:30. It's a little bit outside of the window. 10:15 to 10:30. That's the time that if we fail. So going back to live price right now, and you guys see these are the zones that we're talking about, Mickey and I. So if let's say market opens somewhere around here, and we break above, and then by 10:15 to 10:30. Obviously, if we're still above market open, but even if we're inside market open, wherever, if by 10:15 to 10:30 we fail to take this P12 mid or even try to make an attempt to come to it, I can now basically, again, back to the deduction standpoint, process of elimination, say from here to here, because this is an in statistic low of day, and then this is a low probability by 10:30 and beyond of getting retraced. I can basically black out. If I wanted to, I could black out this entire portion of my chart because this is a low probable price movement of the daily candle. Going back to what I was telling you all this morning, the reason why we war game and why we trade with statistics is us as day traders, we're trying to trade the fluctuation of this daily candle, just like how you see this 5-minute candle forming right now, where it goes bullish, bearish, bullish, bearish, bullish, bearish. The daily candle does the same thing. And so we're trying to deduct all the lowest probable price movements that we can do. So within this daily candle, and then we're also trying to find the highest probable fluctuations of this daily candle. And so the highest probable fluctuation right now, at a minimum, is us to take this high, because this is an out of statistic high at 2005. And so if you were to watch the daily candle, we're right now trying to anticipate the daily candle doing this, right? Fluctuating back up to make the wick of the daily candle to the upside. And then if we make the in statistic high around market open to 10 to 10:30, around that time period around New York market open, we're now wargaming the fact that, okay, if we make this wick on this daily candle, so here's the wick. I'm a terrible chart artist. All right, so chill out. So as we go down, we're forming the wick of the daily candle. And now all the statistics below price here, we got on my screen, we have 3 bearish levels with 89% probability, 77% probability, 9% probability. We have the long fall scenario right here, taking this low, We have opening prices 1 and 2 a.m. with 70% probabilities. And then obviously we have the P12 mid. So we have those major statistics in our favor that if now we lock in this high to make this wick, that the daily candle is going to do this right here and just fluctuate down just a little bit to retrace these statistics here. And that is the fluctuation we're trying to capture. Or the other side of the coin, if we get above market open and by 10:15 to 10:30, we're failing to make any attempt to come to this P12 mid, we're trying to anticipate the fact that the statistics are telling us, okay, next major high of day time is around noon, okay, 12:30 to 13. And so we're trying to take advantage of the other side of the daily candle printing the body. And then by noon, seeing if it wants to then correct and make a wick.
So members only, who's a veteran, right? Like, first and foremost, let me thank all the veterans out there, all the service members, all the nurses, all the ER people. Like, if you serve your community and you do a position that, you know, helps others over yourself, like, huge shout out to you. But members only is a veteran, and he definitely knows I love this song, Hooked on a Feeling. I love scaring the shit out of Austin with that song, but that's during market open. Speaking of, share my screen. I want to see if you guys can hear the music.
No, you can't. It's just the stream. We can't play fun music on stream. We'll get
So they can't hear that? Nobody can hear that? Oh, that's weird. Oh, what we can do is say the Pledge of Allegiance.
Or whatever.
We got it. What if we play the national anthem before every trade? Like, are they going to copyright us? America.
We're gonna treat this like a sports event right before market open.
Yeah.
National anthem. Hand over your heart, everybody.
Yep.
Is that? Hold on. That's actually a question. I just hit me with, and we're curious. So we got 103 people in the chat. So obviously, we probably have people from other areas of life other than just being American. Do you guys, when you do your national anthem, do you guys put your hand over your heart, or is there another like custom and courtesy you guys do? I've always wondered if that's just a pure American thing, or if like you do it somewhere else. You do like the French national anthem. Do you still put your hand over your heart, or do you freaking stand on your head? Like, what do you do when you do your country's national anthem? I think Germany's national anthem is Kendrick Lamar's Not Like Us. Yeah.
Yes.
Thor. Anya says no. I think Anya I think I remember you said you're from somewhere in Africa. I forgot the country. D, we do. D is hold on. See, I know my people. D's Italian.
The Canadians said that they just during their national anthem they chug their maple syrup while it's playing. That's to be expected. So one thing cool I'd like to point out before the open, right? So this, where it says medium MAE on my chart, that means out of the last 10 days, 5 of the 10 days at 9:45, put the wick of the 3 hour, 9, 10, 11 would happen here, right? And then there's an 80% probability to even get to the blue box. There's a 60 where the blue box, dark blue meets light, and then there's a 50 right here. So that's lining up with this area, this high of the day zone right here. So I'm going to be interested to see, does 930 give us a buy up in here and then turn around? Or do we get a buy and this was the low of the next 3 hours? So we're starting to get some stuff that is sinking in with this high of the day zone for a long pause.
Oh yes. Cool. So back to that. So you said you did for London, instead of a long, you did a short false.
Yes, because you had a one tick wonder.
Okay.
Which is a bullish signature. Which means I'm expecting a firecracker down or a face ripper up.
Okay, so I think I see that's why you're
I'll be definitely looking at that 10 basis points on top of the 930 box. I'll be definitely looking for a possible rejection here. And if I don't get it, then it's like, dude, long true, right? Low of the day's in, it makes sense. And then I'll shift my mind to end of day, high day for a long true. Two minutes till market open.
Oh, I'll be right back.
All right, yeah. Pocket, can you change the music to something heavier? Like, we're jamming out the elevator music. What is this? It's better than nothing, but good grief. Well, while he's not looking. Y'all hear it?
Stop it, Mickey. Don't get us banned.
Hello, yes. Yes is going long fast right now. Same with YM. YM's like, well, we're done. We're done playing today. And Q's like, I'm gonna stay high. Put that music back on. I was just kidding about it. It's better than nothing, but all right. So what we're getting right now is a possibility, right? So if we look at this is the highest probable structure for the next 3 hours. We're getting the high placed at 920 and then we're dropping. So if that's going to be true, 930 needs to give a sell, get below 10 basis points, and then we're expecting 10 o'clock day not retracing the 9 o'clock zone whatsoever, and then a deeper third hour effect for the 11 o'clock. All right, never mind. And we're going back up. Oh, 930 is open, right? So cool.
Well, let's have a good day, ladies and gentlemen.
All right, we're heading up to this high of the day zone right here where it says medium MAE. This is where I'm expecting the reversal to be at, right? It can turn around right here, right now if it needs to. I'm paying attention to the 930 close, right? Let's see how we close. We're closing weaker right now for the 30-second opening range, but I don't care about the 30-second opening range. I care about the whole minute. All right, and that is a good repeat of what happened Friday at 930. So far is what we're seeing. So if we close weak, it'll be just like 930 on Friday, where we close weak and then we come back up and then we sell off for a long fall, just like we saw on Friday. But we're not going to rush to failure. We're going to set the conditions and make sure that's what it wants to do. Right? We cannot get above P12 high, so let's see if we can get rejection at the 50, the 25, or if we're going to like, because I don't see a snap to the downside yet, right? I don't see a snap to the upside or the downside, so I'm paying heavy attention to where the rejections are.
I'll say if we get a break that I can define decent risk on for the other side of market open, I'll take a cash flow long. If we break to the downside, I'll take an extended cash flow short.
All right, we're rejecting the 50. Let's see if we can get follow through to the downside, right? Or it's just false.
Yes, and please, what Mr. H just said in the chat, everyone remember there's a 20-second delay. So first and foremost, these streams are not made to copy trade. So you should not be here to just copy trade whatever we're doing. And then if you are, you're only screwing yourself even more because there's a 20-second delay.
All right, now we're between the 50 and the 25%, rejecting the 25%, right? Not breaking out either side, like, so we're just being patient, right? I can definitely start seeing the sell, but I'm not going to take it till I have the obvious sell come into play, and then I'll start selling green candles back to the upside. But for now, I'm just being patient. Like, it hasn't defined itself yet. I know what the probabilities are. I'm just waiting for live price to catch up, and there we go. There's your sell. All right.
Got 20 seconds left.
So are we weak enough to come touch this 10 basis points right here? So if we look at the 5-minute candle, right, this is just a 5-minute doji right now.
Second, nobody trades 930. What you talking about? That's what we're looking at right now.
All right. So right now we can't get in or out of, we're staying inside the 930. So this is where that tactical patience is a must, right? We still know that we can come up here and touch this area before we start expecting reversals, right? But it's too weak to get above the 25 currently, right? ES is selling. Nope. ES is still within its 930 range, and YM as well. YM's rejecting the 10 basis points to the downside, so that's that. Could be a sign of strength for the NQ. Right, NQ still cannot close above the 50% of the 930 range.
We need like a freaking hype AI generated music.
Yeah. All right, now we're closing above the 50, so it looks like we want to go for upside targets. Let's wait for the breakout. To confirm, right now we're just doing a 15-minute doji, right? So let's just wait.
Oh, here's this one's called Epic. We can play this while we trade.
All right, testing the 930 high right now.
All right, 30 seconds left on this candle.
So we're going to be going to the next 5-minute candle as a bullish 5-minute, right? So we're going to see if we can get a retrace from 935 to 940, test the 2550 of the 930, and start targeting longs. Austin will take the next long in like 12 seconds, more than likely, but I will wait.
5 seconds. 2, 1. I'm long. I'm going to be targeting 0.12% into the high daytime, which would be 840, 850.
Yeah, the cool thing about this long is the 930 defines like we're above 930, and so from a 15-minute structure, this low that currently is in can be the low for the next 15 minutes. But we need to get above this 10 basis points to the upside. Good trade.
Yeah, I'm gonna place my stop here at 788.75. That's gonna give me really good risk to define for this trade. Because what I try to tell you guys a lot of the times is I'm not trying to trade to be right. I'm trying to trade to that so that way if I'm gonna be wrong, I'm gonna be losing against the winning team. So I flipped to my screen here so you guys can see the idea behind this trade. So in market open, we have objectively a 0.1 to 0.3% probability of price movement, a favorable price movement off of a break of market open. So if I were to draw that, this would look like this right here. 0.1 to 0.3 makes this positive zone right here.
All right, you should be coming up on TP, man. It's not going to give me an entry.
TP is 848.50. So
848.50.
my job as a cash flow style trader is how can I get cash flow out of this move without over leveraging? And then how can I also do this with a repeatable, scalable risk structure? So if we pull back here to this other side of market open, in this case, that's going to be bearish, right? So I'm losing against the winning team. And so this 0.12%, and the reason why I'm targeting 0.12% is it's right inside this Goldilocks area of high probable price movement with the highest probable high of day within the configuration that we just went over this morning.
Coming up on your TP. Everybody in the chat that's from the boot camp or the Pat Trade group that took that long one and type it in. How'd you do? That was a great long. I'm going to be looking for a reversal, but it's probably not going to show its face until 9:45 to 10. So maybe, oh yeah, like, did you take the 930 long and did you hit TP already? We're closing above 10 basis points, so that's a good signature for the longs. Right, so the further we stay above this 930, that long fall scenario becomes a long true. Remember, these probabilities, the P12 mid, Asia OU, settlement, Globex, the closer we get to 1015 that we don't put in that reversal, the more likely those probabilities are dropping. TP hit, long win, nice.
Nice. Good job, guys.
Well, I missed the long too, Thor, and that's okay. Like, I do trade 930 a little bit different than Austin, and some days I get it and he doesn't. Some days he gets it and I don't, right? And that's just the nature of the business.
It's literally the
Some days
fluctuations of edge.
Yep. Some days we both get it.
Yep.
All right, so
Nice.
we're entering the high of the day zone, right? We're also entering an area of max distribution between 930 and 1030. So I am looking for a reversal here, right? To take, because we are going to be defining the high of the day zone for a long pause, right? So if you're in a long, like, don't get freaked out from a 5-minute scale, like statistically, right? We come retrace, and then you're going to have the ability from 940 to 945 to either determine, do you need to stay in this trade or do you need to get out of the trade on a green candle going up, right? Remember, the 930 to 945 trade is all, there's that reversal. Like, that's a pretty big, let's see if we can get price response right around here. Looking at this 5-minute candle, this is a 5-minute bearish candle to the downside. From a 15-minute approach, this is just a normal bullish candle, right, with a very large wick, right? That wick can get retraced into the 10 o'clock hour or the next 15 minutes. So it's not time to like just close all positions and say, I'm the worst trader ever. It's time to like know that like price is rejecting the 10 basis point, a high of the day zone that we have identified, and that it might be time to just cut that edge, right? And sit on your hands and wait, right? But like, remember, this is just markets don't just move up and down. They retrace, they expand, they retrace, they expand. So for me, right, I would say the moment we cross over this 930 low, right, I'd be out of all longs if I was long. I am actually short, right, at the 10 basis points, right, and I'll post it in the Discord, just a starter contract. So 2 micros, right, nothing really cool, right, but I know this is a high of the day trade for me, and I'll put it in the random chat so you guys can see, right, and I'm looking at either get stopped out with 2 micros, right? Or add 2 at 10 o'clock, right? My stop is above, right, this high of the day zone, right? So that my risk is only worth $149. And that's easy. All right, so now new 5-minute candle, right? Out of the 3 5-minute candles that happens between 930 and 945, this one now is testing the footprint of the previous 5 minutes. So does it reject, or do we get continuation for a very strong and bullish 15-minute candle? Right, my eyes are right here at this 10 basis points where it says 0.10. Like, do we start closing above that or below it, right? Because we know that in the last 10 days, the 3-hour wick usually comes at 9:49, 5 out of the 10 days. All right, so what that means is, just like a daily candle has an open, high, low, close, the 9, 10, 11, right? If you look at these, the colors don't match. Like, so this red doesn't mean bearish and green doesn't mean bullish. It means that out of the last 10 days, we have put the 3-hour wick in 5. So 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6. 6 of the 10 times by 9:49. And then we've put the other side, the body of the 3-hour, 1, 2, 3, 4, 5, 6, 7, 8 times after 10:45. All right, so we're closing above that 10 basis points. All right, so that's a really good signature for anybody who's long right now.
Yeah, Danny, I wish YouTube. The only thing I really wish YouTube chat did was I wish you could use GIFs and pictures. It's the only thing.
All right. And so it's going to show its hand. It's definitely going to show its hand going to 9:45 to 10, right, of what it wants to do. Does it want to go up or down? But the one thing we have to notice is we have not come close to closing below the 930, right? right? The 930 low is still intact and strong, right? So right now, live price is telling us we know long false is the higher probability, but we don't care, right? So we've got to keep that in mind.
We got gunships with another minute left too.
Yeah, I completely forgot to do the to-do list. I was so focused on this.
What's up, Scott?
Scott's in the house. All right, so new 15-minute and 1 minute. All right, and so far, our live price is saying we want to be long and strong. We are rejecting this big wick that happened the previous 5 minutes, so let's see, can we get above it?
I got my TP rejected 3 times in this trade.
Oh, wow.
But this is where, honestly, guys, this is why we stream like this. For anybody that's new here, one of the cool things I like about live streaming is to show you guys the realities of trading, both the good side, the bad side, the normal side, the unsexy side, the sexy side. You guys get to see the meaner version of everything. And one thing you guys get to see is how does somebody execute in the real markets when there's pressure, because we can back test, we can talk theory, we can talk strategies, we can talk all this stuff. But I think honestly, the best way to, I guess, see how people execute with their edge and see the quality of edge is when you see it under pressure, because that's really the defining factor on, do you have something that gives you peace on the charts? That's it. Like if you have peace on the charts, you can consistently execute the same way, because if you want some sort of long-term probability that's in your favor, if you want positive expectancy, you got to have consistent execution, okay, of something that does yield positive expectancy. The moment you fail to consistently execute, you give yourself a whole nother set of probabilities of what your equity curve could look like, what your profit factor would be, all that stuff. And so you have to execute consistently. Well, how do you do that? You have to do it with peace on the charts. You have to execute with something that gives you confidence to just execute, right? You guys have seen me like live right here in this trade. My target's right here. I've gotten tick denied one. Well, when I say tick denied, like it comes close to my TP and then it just comes right back to entry or whatever. So in this case here, we went right here. My TP's right here. And we went back into the entry. We came back. We got another almost TP right here. Came back. Almost another TP right here. And this is where a lot of people, they start to freak out. They're like, oh my God, do I close the trade early? No. We use statistics. We target objective areas for a reason. And so the only thing we have to acknowledge now is that we're using statistics, something that is historically relevant, that repeats more than it doesn't. So I don't have to worry about winning a singular trade. I don't have to worry about when I click the button, is this the one that's going to lose? Because it's going to. Losing is an inevitable fact of the market. And so if I can just let a trade play out over the next 100 trades, it doesn't matter if a singular outcome of a singular trade has to be a winning or a losing trade, because I know I'm using something with positive expectancy that also repeats more than it doesn't. And so this is the edge and kind of the cool feature of using statistics and kind of how we trade is you guys get to see days where it's a one and done, cash flow collected, and then we're good. And then you also get to see days like this where maybe I get stopped out. Maybe we fail to even make 0.12% off market open and we reverse turning this thing long false. Then I just let my stop loss do the worrying. I let my risk management do the worrying, and then I get in for the short side. But either way, I can take this trade with confidence, knowing that if I do the same process over the next 50 to 100 trades, the consistency is baked into the objective statistics that I'm targeting, which is high day, low day statistics, retracements to all the levels that have more areas of hitting more than they don't. You guys see on my screen, this is the gunship, these green boxes and lines, and these green lines right here show MFEs, right? Max favorable excursion. So if I'm going long, the MFE would be up. If I'm going short, the MFE would be down. And so that's all these green lines are showing, is just the median current market condition MFE of whatever I'm trading. And so if I'm bullish, if I'm in a position, I can see that, okay, well, in the current market, this specific movement has gotten at median favorable price movements from this dotted line to these green lines to this line to this line. And the farther we go up, obviously, the lower the probability of them getting to. So I can see basically a heat map of probability. I can see all the way from the closest, most highest probable area that price could get to, all the way to the farthest median common favorable price movement. And so that's a little bit of context of what's on my chart. What's up, Gigs? Holy, it has been a minute. What's up, bro? Dude, how you been? Give me an update. Where's Gigs at nowadays? Hey, there we go. TP hit. Look, Gigs came in. Hey, Gigs brought the flute guy with him, baby. Let's go. Boom. Cash flow collected live on stream. We don't have soundboards, so we got to get some boom babies in the chat. All right, there's the trade. If you guys see I have to share windows, so I can't just put my Project X on my screen. It's only sharing so I got to take a screenshot and paste it here. But here was the trade, long at 820, off this 1 minute break right here, 820, target 849, target right here, 849, boom. And that's all we need, right? That's all we need. We executed it live right here. You can go back and watch the recording. And now this is the cool thing of, like, I want you guys to really focus on this. I want you to literally focus on this and listen to me for a second. If I have an area with a high probability attached to it, if I have a direction, me as a cash flow driven trader, I want cash flow out of the market. I don't want to build wealth. I don't want to become a millionaire from trading. That sounds super stressful. I want to build cash flow. I want to take something that is highly repeatable, low-hanging fruit that the market gives me, and I want to take that cash flow out of the market, and then I'll let other avenues build my wealth. I invest into real estate. I'm a long-term dividend growth investor. I sell options. I do other things to let the cash flow from the market to then grow, because this is a high-risk environment. So I take cash flow out of a high-risk environment, and I plug it somewhere else to then grow in a safer environment, right? So in this trade right here, if I have an overall direction, if my overall direction from a statistical standpoint is up, in this case here, what was the statistics that gave us overall intended direction? We had the high of day from here to here. This box right here was based on the variables that we have. This gives us a potential high of day area. Okay. And it's the same thing right here that we're in right now. These highs of days zones. So now in market open, if we're staying above market open by 9:45 to 10, which we are right now, well, what's my overall direction with levels? We have these median MFEs. This one right here, all these little green lines and dots y'all see on my chart. Again, all they are showing you median favorable price movement in an overall direction. So if I know that all these little lines here have areas where price could come to, what I want to do is, with positive risk management, I just want to collect a piece of it. I just want to get a piece of the pie. I don't want to sit and trade the full move, right? Because how many, and I ask this in the chat, and I ask this all the time to people, how many times have you targeted a trade just to get tick denied, or just for it to come a portion toward, like, I'm sure a lot of people here, just show of hands if this is you in the chat. Just say, yes, I've done this before. Or, yes, I've experienced this before. You take a trade, in this case, long. All right. And price does this. Goes in your favor, goes in your favor, goes in your favor, and then does this. And then either one of two things happen. Obviously, price just keeps on going against you, or it taps you out just to keep on going. I'm sure everybody in here, and if this is you, just type yes in the chat. But this is a very common occurrence. And so me as a trader that just wants to pull consistent low-hanging fruit out of the market, what I'm trying to do is I'm trying to quantify this right here. I want this piece of the pie. I want, if my overall intended direction has a 60% probability of working out, 70% probability of working out, well, I want that direction to be my area that I'm trading towards, but then I just want a piece of it. And so what I do and what we do in the pack is we take a portion of this move and quantify that and turn it into a cash flow system. And that's how we pull cash flow out of the market. You guys just seen that just live today.
In reality, like, you only need a very high expected value 5-minute candle to meet the needs of what we need in general life from an intraday perspective, right? I think you did a good job pointing out that, like, the wealth comes from other sources, right? Like, you don't need to have your life savings in intraday NASDAQ, right? That's probably the dumbest thing you can do with wealth, right? What you should be doing is having multiple sources of income, right? Multiple sources of revenue, multiple sources of cash flowing generation, right? Like rental properties, intraday, right? All these small, high expected value hits that just add up together, right? And I am going to get stopped out in about, like, right? Nope, still hasn't hit the 149. I'll let you guys know, and it'll be a loss for 149, and that is okay, because over the next 100 trades where I get this scenario, right, I know I will be losing against the winning team, and this is a team I want to lose against, right? Probabilities-wise, right, the higher probability movement is for us to start shedding to the downside between now and 10:15, right? But, like, if it live price is telling you we don't care about these high probabilities to the downside, we care about upside. So I am now stopped out for a loss of 149, and that is okay, because I've got 1,000 more trades to take.
It's all good, bro.
Oh yeah, dude.
Well, we got the
149 is
disclaimer
easy.
literally up on the screen. I don't know what more we can do. We only win sometimes.
Mm-hmm. So we're inside of previous days and previous weeks wick right now. So we're seeing, is it going to reject that at any point in this high of the day zone right here? So now, if we come back to our histogram, right, we know that 1, 2, 3, 4, 5, 6, 7 of the 10 days have made the 3-hour wick. To the upside or downside is irrelevant, right? So we're trying to figure out, is this the low of the next 3 hours, or are we going to put the high in and then reverse? And so far, live price is saying this is the low. Right, you still got 1, 2, 3 more times where, out of the last 10 days, where it has reversed after where we're currently at. Scott, you're crazy.
Riggs, where you been, bro? Tell me how you been. Still got my Apex accounts. Is there any space? Yeah, dude, Riggs. So Austin's less confusing. So it's the same thing since you left. I think You've been gone for like what, 8-9 months? I haven't seen you around in a while, but go through the boot camp. Go through the boot camp. We've now basically taken how we trade, and we have a very structured 3-month boot camp. So you learn just from the very beginning, putting it all together, quantifying everything, building risk profiles around it. So you literally just do that. Do that before we even talk about anything else. And the next one is October 15th, gigs.
18. Always on a Saturday.
Why do I keep saying 15th?
Payday. We're not doing payday activities, man. All right. So new 10 o'clock candle in 2 minutes, right? We're approaching previous day high, and we are currently in the footprint. We're at the max extremes of this high day zone, meaning we are expecting some kind of rejection. But if price just blows through it, right? We also hit our distro for the New York session. So we're definitely expecting some retracement now. All right. So remember we talked about the 4-step reversal, right? 9 o'clock, 50% below 9:30. 10 o'clock takes out 9 o'clock's low and then rejects off of 9 o'clock, 9:30 or previous hour 50. Is the point to the fact of a possible Q1 high for the 10 o'clock hour, Q4 low, right? Now we're starting to see if this is going to be it, right? Like we expect for us to first and foremost get underneath of this 9 o'clock 50%. If we can't do that, the market's long and strong. And then we expect a long true, right? And end of day, high day. All right, 10 o'clock's opening up. Let's see if we can do a footprint rejection and start shredding the downside, or if we're not even weak enough to get below this 50%. Because we haven't swiped the 930, between 930 and 945, like I'm expecting. As of right now, the daily classification is the DMP, DWP to the upside until we get back down here, right? Until live price tells us, no, not DMP, DWP, range 1, right? We have to, this is how we align live price with historical data. Right now you're seeing, we looked at all the statistics that said, hey, it said, hey, P12 mid, 86% probability of getting hit after 930, right? But it falls off at 10 to 10:15. Same with Asia OU, same with previous day mid. We saw the high probability of settlement on a Monday, but live price has to confirm it. Right now, every minute that passes that we don't start heading down here, these probabilities are falling off. And this is the live market saying, we don't care about those probabilities. We want to go up. And our job is to listen.
Real quick, Nina asks in the chat, what can you do? What can you study in the meanwhile while you wait for the boot camp? Pocket, if you could actually post the link to the specific Discord channel, I think you can do that in here, and just let people know where to go. And so if you guys have already signed up for the boot camp, you'll already have the roles. So when you click on that link, you'll already be in the Discord too. It'll take you right to the channel. If you haven't yet, but you want to, I guess this is a better time than any. Go right here, scan this QR code. So the QR code on the bottom right gets you into the Discord. The QR code right on the screen right now that says Pack Bootcamp beside of it, that's the wait list, the WAP. It'll send you to a WAP store. It will not charge. It'll charge you like $1 for now. It just to verify that your credit card is a legit credit card. You'll get it right back. It's not like a charge you won't see again. And then you'll be accepted anywhere from now till October 18th when the start date is. And if you join right now, there'll be like there's an onboarding channel. So you'll get the content, kind of like some introductory videos to kind of get you guys in the mindset of what we do, the small little things. I think the 4 steps are in there. Just very basic, bare bones stuff of what we do. So that way you can start kind of getting familiar with the terminology, what we're looking at. And then once we start on October 18th, we hit the ground running. All right. So be prepared to I tell everybody this, and this goes for not just joining the boot camp, guys. This is literally just, if you just are here to just hang out, but you're still trying to like learn how to trade, this is for you guys too. You have to put off the fact that you're trying to make money. Like we talk about this so many times, and this is the biggest pet peeve of mine is when I'm trying to teach somebody or show somebody something and they're trying to act as if they're already at that level to execute. Guys, it is perfectly fine. It is perfectly fine. I don't care what anybody says, to slow down, put your prop accounts to the side, put your cash account to the side, whatever actually you have risk on the table with, and just slow down and focus to become a subject matter expert at one singular thing. Because what happens to a lot of people is they'll go and you don't have to join the boot camp. You could go and do whatever, but wherever you're learning, if you are learning, but also trying to trade an account, make payouts, get money, do whatever you want to do, if you're trying to do both of those, they're just going to conflict with each other. You're going to be stressed out. You're going to get pissed off because you lost a trade, or you're going to get upset because you didn't get what you wanted. But then on the other side of the coin, you're still trying to learn the whole process. You can't operate a business, because look at this from the lens of any other business in the world. You would not go pay money to get the LLC established, get a business bank account, start getting the fundamental part, the foundation of the business created, while also trying to operate the business. And no, like, you would get your foundation set, then start to accept customers to build a business to grow and scale. You can't do the same as a trader. It's the same thing. So if you guys join the boot camp, just as a expectation management, please understand. Oh, it shows someone scanned the QR code. That's cool. Hey, more people scan the QR code. That's dope. It says, I don't know if you guys see it, but it pops up a little message saying somebody scanned the QR code. That's cool.
It's just for us. I was going to ask you that later. That was kind of cool.
Oh, okay.
And just so you're aware about the pack ones you said earlier, is some people have been accepted, some people haven't. So obviously, yeah, if you haven't been accepted yet, you haven't been charged, you'll get access closer to October.
Live price update real quick, right? Our problem that we're solving right now is, we're stuck between the 9:50 and this footprint. So the wick of the last hour, right? Are we going to reject it and do like ES, which is below 9:30 and has followed the 4-step reversal, or YN, which is followed the 4-step reversal? Is NQ going to follow suit, right, and reject this wick? So maybe break out of the 05 box and then reject, or is it being up over the YM 1% is above YM 1%? Is it going to drag ES and YM with it and us have a bullish day? Right, so we're paying attention to that right now. All trading is on pause, right? Because number one, for me, we've already been stopped out once. And number two, I'm going to wait for this 15-minute to show me its hand. Does this want to be a DMP, DWP day and a long true? Or is this going to spend the last 15 minutes of this possibility of turning around? Is it going to reverse, right? So this is what it's like to, display tactical patience. I know what team I'm supposed to be on right now. And I don't have to sit there and strike out until the market shows me the obvious, what it wants to do, right? So I have the rest of the day to take longs off of whatever level I find, right? But for now, like, I know my job is to be looking for this, just being patient and see, does it want to go with a higher probability, which would be a long false, which would sell and get us below 9:30? Or are we going to do an anomaly day and do a long true? Right, which has been about 6 days since we've had a long or a true day, right? So we're due for one, and continue heading higher. So short story is, right, this is the 9 o'clock hour. The higher probability is to look something like this: 9, 10, 11 to the downside, right? Or is live price showing us that it wants to do the anomaly, the less probability, right, and go 9, 10, 11 to the upside? Now, I have plenty of time to place any trades, but right now we're going to display tactical patience, set the conditions for our success, so at the end of the day, we don't go home with a dirty diaper. All right, thanks. I got to go pee. I'll be right back.
All right. While we have some intermission time here, this is the gunship portfolio. And these are live executions here of the gunship taking cash flow movements off the market open. As you guys can see here, so for YM, it looks like we're still in a short. We got cash flow on Russell, still waiting for silver to set up. Bitcoin took cash flow, natural gas took cash flow, and we are long copper. So this is something else kind of cool that if you guys go through the boot camp and then want to join the pack trade group, so the pack trade group side, so this is how the entire community works. You can join the free Discord side, and we do free live trade sessions on Mondays like you guys see right now. And then Tuesday through Friday, we do re-engineering sessions for free as well. So you guys can sit and watch us and the students in the boot camp kind of go through the day, and we recap the day from what we looked at, trades, all that stuff. So that's like the free side. Then the next step is if you want to learn and get conditioned with the terminology, the statistics, the process, the frameworks, the trade ideas. If you want to get enveloped in that way of how we trade, that's what the boot camp is for. And then for the pack trade group, it is live trade sessions to maintain access for the tools that we use, aka the indicators, the daily profiler. Here soon, we're going to have an actual journaling software that is specifically tailored to how we trade in the group. And that is that's the pack trade group side. So the continuation of all that. And so what we're trying to do here is we're trying to build a community, but we're trying to do it in the most ethical way possible, where instead of just saying, yeah, anybody can join and just hang out with us while we trade live. In all actuality, what would happen is if we did that, because we have done that, that was part of my thing that I kind of did a little bit, I guess not efficiently when I first started this out, was during the live trade sessions, I'd be basically teaching the whole time instead of actually executing. And we kind of have this really cool process now where we train you guys up just like in the military. You get your boot camp, your basic training to just learn basic skills. And then in the Army, in every branch you have it, it's called different, but in the Army it's called AIT, Advanced Individual Training. It's now that you're a basic soldier, you now go to your specialized school to what you signed up to join the military for. In this case, Pack Trade Group is now, okay, now that you've gotten your basics, now that you've understood how to structure the day from a statistical standpoint, how to understand what measured moves are, how to understand how to build your risk profile with specific ways of how you want to trade. We don't show you guys a strategy. We don't say, this is exactly how to trade at this time, at this trade entry. Here's your stop. Here's your TP. We don't do that. And the reason why we don't do that is because it sets yourself up for failure. Not everybody's going to trade exactly the way we do, because guess what? I can trade the same exact system that you trade, and we have vastly different results because the way that you and your perspective on the market could be different than mine. But if we have the same commonality of language, meaning statistics, if we both know, okay, between these four major times is going to be the high of day. If we know we retrace to midnight open more than we don't, if we know that we retrace to XYZ level more than we don't, blah, 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 then you can structure your own edge and your own trade ideas around those objective probabilities. And so we give you guys the tools of how to actually fish, not giving you guys fish and just saying every single day, here's trade signals. So we build you guys up so that way when you join the Pack Trade Group, and we do these live trade sessions, it is just rinse and repeat, rinse and repeat, rinse and repeat. This is how the people that have taught me, right? So like if you go through the boot camp, right? The people that taught me how to do XYZ, you get to see them every single day be right or wrong in the live markets executing the edge that they teach. I don't see a lot of people like, you know, as far as like what we do, this is something that we try to, we take a lot of pride in, is that we execute live. We say when we're going to get stopped out, we say where our targets are, we say where our stop loss is. We try to show you guys everything. So that way at the end of the day,
before the market opens,
we war game before the market opens, all that stuff.
The biggest thing is like, are we leading by example, right? Like, are we practicing what we preach, or are we the people that say, do as I say, not as I do, right? Like talk is cheap, right? Actions is everything, right? And there's too many people in the space that say one thing, but then do another thing. And us both being military, right? We know that everybody's out to nickel and dime the retail trader. Everybody and their mother is, right? And we're just like, our mission statement is in 5 years to be able to trade with cool people that take it as serious as a profession, as a business, speak the same language as us, and to filter all the noise, all the rest of the people who take this as a lottery, as a gambling addiction, whether it's prop firms or live trade or options or whatever. Like, we don't want to be surrounded by those people, right? I'd rather have a room full of 10 quality people than thousands of people who just have their hand out and are part of the entitled generation and they can't think for themselves, right? Like, it's not how you win wars, and that's not how you win life, surrounding yourself with those kind of people. Pocket, can you check in the private message? I need you to block a certain individual.
I don't even know how to answer this. Like, that's just, it's more funny if anything.
Like, I have no time for that kind of nonsense.
What's up, Drez? Welcome, Drez. Brand new person.
Okay, thank you. So Drez has been trading for 3 days now. I met him on the New York Stock Exchange on Friday and said, hey, join.
Don't block. Daggone it. Yeah, sorry, Scott. We were talking about you.
All right, so coming up on the last 15 minutes, let's see the 10 o'clock Q1 high or the Q1 low is locked in for the rest of the hour. So what we're talking about, if besides the 8 o'clock hour due to the 8:30 news and the 9 o'clock hour because of the market open, but every other hour of this 23-hour market, right, there's a statistical edge that shows us that the higher the low of that hour likes to get put in the first 15 minutes, right? So the day's not as picture as clean as most days, but if we know that there's a higher low that gets put out in at the beginning of the first 15 minutes of the hour, right? That's statistically proven, right? If we break out to the downside, then that confirms that we should get below 930, right? And start heading towards, now we don't think we're gonna make a new low a day, but we can start heading towards, you know, some of these targets to the downside, right? If we take out the upside, then it's telling us right now, right here and right now, do not short this market, right? Your job is to buy the dips. And that's one thing that confuses a lot of the young retail traders is, should they be buying dips and selling rips? Should they be selling rips and then buying dips? Should they be zigzagging the markets? And I think this is a pretty simple system problem to solve, right? Because like, that's what statistics allow you to do, not to, you know, we're not trying to predict anything. We're trying to figure out what the probabilities, which ones have the higher probabilities for the day. Should I be selling rips or should I be buying dips? I don't want to do both, because we know that if I try to do both, buy dips and sell rips, then my 14-day risk of ruin will increase because I'm just taking every side of every trade. And then I'm going to get blown out pretty quick and pretty fast. Yep. All right. Yep. So what we try to encourage is, your job is to figure out, should you be buying dips or selling rips based off of the candle, right? What candle? The daily candle, where there's only two reversals, the high of the day and the low of the day, and then there's a body. And so our job is to try to align it like this, right? Is there a statistical low day? Yes, 1800. We went through that. Is there a statistical high day that we're expecting? Well, data is telling us that today is a rare day where we should expect the low of the day from 1800, and then we're coming up on the last possible push for this to be a high day. If we cannot make a push to the downside literally right now, then our job is to buy the dips for the rest of the day and expect an end of day high day, and that we are inside of the daily candle's body, meaning that the low is in, right? And every chance that I get, I should be buying dips. Right. So if that's to be true, then we need to reject right here, right now. If not, there's still a probability on the table that we put the high of the day in between 9:30 and 10:30. Right. So if we do take this 15-minute candle out, previous 15-minute low out, that tells us there's still probabilities on the table that this 956 can be the high of the day and that the body of the daily candle is going to be red. Hopefully that makes sense. I don't know if I explained that well.
Oh no. Can you hear me?
No.
Oh, okay. The music went out and I was like, oh God, did my connection go bad? Well, I hope you guys have enjoyed our first stream today. Like, let us know in the chat. It looks like I think we did pretty good. I think we did good for our first one. We only had one little hiccup. That was about it.
No, I didn't cuss one time. I'm proud of myself. I didn't call nobody a hippie. I didn't talk about inappropriate things. All right, so we just got below previous hours, 50% broke out to the downside. So that this is all pointing to those probabilities to the downside. The still open, right? That high day at 956, that still holds significant value from a high day perspective and could be the high of the day, right? So right now we've locked in 2 of the steps for the 4-step reversal, which is get below previous hour 50 and lock in a Q1 high. And ES and YM are long fall, so we expect NASDAQ to do the same. Dude, is Pocket going to come up? Because I got meetings coming up. Is Pocket going to finish? Not, he doesn't have to right now, but in the next 5 minutes, I'm going to have to dip. All right, 05 box breakouts to the sell side. Like, so if you took the longs for the 05 box for 10 handles, you got your TP, but if you're taking your sells based off of high a day, right, you're approaching your 10 basis points, which is at the 25% of the 930.
I am always here, but I'm assuming we shut down soon anyways, right?
Yeah.
We don't have to. I just have a meeting coming up. Did you talk about the algo and I don't know, like what else? Gunship.
Yeah. Gunship's done pretty great today. Honestly, really solid cash flow day. We got 3 out of the 6 instruments already TP'd, and then we are currently in 4. 1, 2, 3. We got 4 of the 6 instruments TP'd, and then we just have 2 trades currently we're still in for YM and copper.
Nice. Oh, YM should be closing out. Oh, maybe not. So NQ literally there's a 1% difference between YM was down 25 and NQ was up 75. That's a strong tech market right there. Like everybody always says, like money flows out of one thing into another thing. That's as clear as it gets. All right, so Firecracker is engaged, right? Going down. We need to get below 930. We currently are rejecting previous day high. Like this looks like it's going to be an inside day, right? An inside day. Unless we start making serious movement now. You want to hear what's crazy, right? So we talked about the 10-day, the distro for New York 1, right? We did it to a tick. So 133. Wait, I was on the 5-minute, right? Because we look at the quarters data from a session perspective, but it was 133 or 129. We went to it and then completely reversed. That's pretty fun. That's good family fun right there.
Crack me up when you say that. I guess one other cool little thing here from the gunship perspective is you guys seen this play out. So, I like to, when we're taking these cash flow movements, And we were talking about earlier just getting a piece of the move. So if I go in replay mode to kind of show this, so we were long all the way back here when we closed on the 1 minute time frame, but on the 5 minute, we had, let me turn this off. You see it. Okay. So the gunship is telling us that at this exact moment in the current market of the past 75 days, the median favorable price movement is from the first major solid line all the way to the dotted line up here. This area right here, these are common favorable price movements in this specific moment of time off this specific movement. And so if we know that our environment, just like how if you guys were to want to know what the weather is outside, you're going to dress for the weather of today, not for the weather that it was 2 years ago. So we want to know current market condition. We want to know the current climate, the current weather, that if this specific moment happens, this is the expectation of what to expect for price. And so then if we're all the way down here, so this box that I just drew right here, if I'm long all the way down here, and then I know that also what I was telling you guys, so let me turn off the gunship here because we don't need to see it anymore. We just drew it. This box is from the gunship positive price movement. Well, then we also know that a generic break above or below market open, and you guys can go and back test this for yourself, gives us between 0.1 to 0.3% positive price movement. So then let me draw another box. So then this box is just generic live price movement if we accept above market open. So then here's this box. And now the final icing on the cake is the high day statistics that we get from the daily profiler. And we know that within the daily profiler, this, if we are going to go false now, and again, false is the higher scenario, but even if we're true, then we're already going to be right because a true gives us even more bullish movement to the upside. But let's just go for the most conservative, most probable price movement is, oh, I just messed something up. There we go. Is from this box, this distribution of this high day to here. And then let's draw this box and draw it out. Now let's turn this indicator off. So now we have three major areas. If I were to just see where this box goes, we have three major areas and statistics telling us that this is the most common price movement within the day, within the high day statistic, within the gunship favorable price movement, and then the general statistic of price movement off of market open. And so this gives me every confirmation I need to, can I get a cash flow move off this position? And that is what dictated us to say, okay, 0.12% gives us just a little bit above average normal cash flow. Normal cash flow is around 0.1%. So I get just a few more points out of the market. And then these are the days that pay nice little cash flow base hits that stack up and compound. And then this gives us also money and revenue for the inevitability of us getting a business expense, aka getting stopped out. So that way we can allow this cash flow to compound as much as possible. We could go on a 2-day win streak, 4-day win streak, who knows? But we know overall that this has a very high consistency of being hit. And then the days that are like this, where we have reasons to go above or below market open, let's say the exact same things we highlighted. Let's say we had one statistic telling us we can come all the way to here, another statistic telling us, let's say we have P12 mid up here, midnight open. We have all the statistics to the upside with tons of distance between market open and the low hanging fruit. These are the days that I can kick it and say, all right, this is live price and statistics telling me that I can get more off this trade. And this is what dictates me saying, okay, I can be dynamic with my TP because the market is dynamic. And this is the big pitfall that a lot of traders go through of being static with their risk management, telling themselves, I have to use a 5-point stop loss every trade I do. I have to always put my stop loss below the most recent structure, high or low. I have to put my TP at a 2-to-1 of wherever my stop loss is. Instead of thinking static like that, we try to showcase that you can be dynamic with the market and have a positive expectancy, because half the work is already done for you, aka statistics that repeat more than they don't. So I don't have to worry about my targets being hit more than they don't. That's already taken care of with historical statistics and relevance. Now, what I have to do, and my main job is how can I tailor my target, turn systems on and off with what the live price is telling me? How can I tailor my targets to what realistically the market can give us for the day? And exactly to what Mickey was saying, we do not predict at all. We just play the probabilities to where they lie. If the probabilities are telling us that the distance between here and here gives way more room for movement, I'm going to then just get a small piece of that larger room for movement. If we have smaller room for movement, AKA we do this right here, we have a lot of reasons to go at a minimum to here, then how can I just get my small piece of the pie? And then we rinse and repeat, rinse and repeat, rinse and repeat.
Absolutely. And we can't ignore the fact that we can't get below 930, right? Right. So this is going to be one of those days where it's like, dude, we don't care about your high probabilities to the downside. Like, we're going higher. And that low of the day, that's going to be the low of the day. And your job is to buy the dips the rest of the day. Now, we could range the rest of the day or we could trend, right? But now this is what live price is telling us. Like, we're not going below 930, right? We don't care about all your probabilities to the downside. You either get it with longs and find areas to buy the dips, or walk away from the market the rest of the day and reset your edge, right? And that's what live price is telling you, right? So, like, this is a great example, and I love being able to do this on the first day, right? This is a great example of live price saying, fuck your stats, right? And we were smart about it, and now we know where we're at, where we sit, and what to expect for the next 6 hours, right? But with that being said, that's what I'm seeing. I'm expecting a high of day, end of day, and that the current high of the day is not the high of the day, right? We're about to take out Q1 high, right? This could be just a 15-minute retrace, but at this point, right, we said 10:15 is when all the probabilities fall off of these probabilities to the downside. So now they can no longer be in play, right? We can see, right, for a long fall, it's like, let's start with Asia, right? Asia's got, let's see, 7% left for this 15-minute. Well, no, that's gone now, right? Because it's 11:30 to 11:45. So look at how many times that Asia gets hit after, right? It's only 3, like maybe 10% of the time, 10% of 90%. So are you going to trust 10% or are you going to trust live price? I'm going to trust live price. And live price is saying any stats that you had, you missed the opportunity. Your job is to buy the dip and expect 9, 10, 11 to stack higher, to take out previous day high and put a high day in end of day. And that's all she wrote. Thanks for having me. I do have to jump.
Nice. I appreciate it, man. This was a good first stream.
It absolutely was. All right. Later, Anderson.
See you, man.
How do I get out of this thing? Pocket.
Do not end the stream. Do not click the end stream button.
Pocket, what do I do? If you're talking, I can't hear you.
I can disconnect.
Oh, sorry. I said you can't end the stream anyways, but.
Okay, so I just hit leave?
Yeah, you can just leave, yeah.
All right. That'd be funny if I just canceled the whole thing.
You don't have the power. We didn't give you the power. There was no way we were giving you the power.
That's smart.
Oh, that's funny. All right, ladies and gentlemen. Do we have any questions? This will be like one more chance. If anybody has questions, one of the major reasons we do these Monday streams is so that way anybody that's kind of curious to see what we do, or for the existing members, just another additional rep. Anything that you see us doing on social media, you see us talk about, this is kind of like a time to say, hey, why did you do this? Why did you take this trade? What do you mean? What's a P12 mid? What the heck is a fair value gap? I don't know, just anything. Locked for the day. Hey, let me know in the chat here. We can't share trades, but let me know in the chat for PAC members / bootcamp graduates or upcoming bootcamp graduates. How'd you guys do today? Did we read 930 well? Give me some feedback from your personal trading today. And while we do that, I want to highlight some PAC members that did their analysis this morning. So one cool thing that we have that I've been charging a lot of the pack members to do is I want other people in the group to do exactly what I do on Twitter for anybody to see. And that's what's your analysis and what are the trade ideas associated with your analysis. So the first person I want to highlight here, I see in no particular order, just the first person that popped up in the pack chat is Mr. Ryan Data Breach, Ryan himself. I'm just going to copy what they posted in the pack chat and paste it here on my chart so everybody can see it during the live stream. So we see Ryan. And again, these are all messages that have been sent hours before. Like this is 8 o'clock in the morning. So we have members other than just Mickey and I, because it's kind of cool that, it's kind of cool that you see people that lead communities and stuff. Yeah. Like they're supposed to be somewhat efficient at trading, but it's really cool to see people in those communities showcase exactly what we're doing, but in their own way. And so it's to kind of, show people like, hey, this is something that you can do if this aligns with how you trade. If you're an analytical person that loves statistics, that type of thing, this can be for you because other people are getting it. And so this one, here's Mr. Ryan, the analysis above the previous month midpoint. And then we are within the NFP range, within the Sunday range, with an in-stat, that's what IS stands for, in-stat low of day, out of statistic high of day, and we're close to the P12 high. For a long fall scenario, price finds footing on the P12 high. It makes a high of day at 9:30 to retrace back to the P12 mid. We did not get that scenario. The first one is a short false, looking to see if P12 mid or Asia OU to be taken out, and then a breakout about 9:30 to see if price goes above P12 high. So we kind of got half of the scenario one with what we got from Ryan. So Ryan, if you're in the chat, let us know how you did today. Where we did find footing on the P12 high. This is the P12 high right here, this white line right at the out of statistic high. And looking for Asia OU. So we did not take out Asia OU, and a breakout from 9:30 to see if price goes above P12. So we got the breakout above 9:30 with price finding footing on the P12 mid. So pretty solid day, about 50-50 on your scenario, Ryan. So good stuff. Appreciate you sharing. Mr. Danny Walker, you guys see him pretty live in the chat here. So Danny Walker's, let's turn the text down a little bit so we can see. So Danny, we have in-stat, low of day, out of stat, high of day. This makes us bullish right off the bat. We have levels above pulling us up. We now have rejected the midnight open, moving towards the green levels above, and the green levels that Danny's talking about. If I go back in time here, you'll see the green levels. This is an indicator the pack trade group specifically has. These are just levels that price has retraced to, and then whatever time frame you're on, we can see the probability of in the past. In this case here, I'm on the 1 minute time frame. So the past 15 days, these levels have been hit 100% of the time. So in the past 15 days, every day in the past 15 days, these levels have been hit. This one 93% of the time. So we had a lot of levels giving us the objective potential that price could move to this area on the chart. And so you can see we obviously took that out. And then once they get retraced, they go away like that right there. We now have rejected midnight open, moving towards the green levels above, looking for 9:30 to give us more details, or for now, it should be a high of day. And then at 10, we can know if we leave it for the high of day, and look at exactly what happened. Let's go forward here. Going into market open, here's 10 a.m. What did I tell you guys? If we stay above market open by 9:45 to 10, I'm expecting this to be a true instead of a false, meaning we don't come back to the other side and take these lows down here. And so that's exactly what Danny was meaning right here as well. So he called that very nicely. Scenario one, waiting for a close above P12 high, check. Then looking for gunship longs, boom. Go into the gunship. We can see, actually, if I go to the heat map, so this is every single gunship move on the chart here going to load up. And we can see all the longs that the gunship got. So starting here, look at this. All these green lines are gunship longs. So Danny accurately called all this. The red lines are not stop losses. This is not a trade signal indicator. This is showing you the common drawdown of a specific move and the common favorable price movement of a specific move. So you can see we took out a lot of the favorable price movements. We even came down to where we could see some drawdown, and we did. And then we came back to the upside and took out a lot more MFE. So good job, Danny. Let me know in the chat how you did today. Let's see. Who else? Shag. Copy and paste Shags. Shag says low is in stat, high is out of stat. High of day is 2010, low of day 182, weekly, blah, 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 scenario. We take weekly P12 high, making us New York 1 long. There we go. Get on the daily profiler. This is what Shag is talking about. We go long for New York and then go to P12 mid to make it false. So we did not get that scenario, which leads us into the next one. We take towards P12 mid first to take out new highs for the day. So we did start pulling towards the P12 mid right here in the pre-market, but we just could not get back inside the P12 high. And then scenario 3, continue to drop in price after defeating the lowest side of the probabilities. So it looks like Shag, I don't think, let me know in the chat if you're still listening. Did you reevaluate when we got to market open, and especially by 9:45 to 10? Did you see how, okay, I can eliminate most of these scenarios and we can adjust fire to then potentially go to the upside? And then this is the other thing I tell you guys. Listen, you don't have to see the market like I do or Mickey does. If this wasn't something that you've seen clearly and you give yourself 3 to 4 different scenarios and they don't align with what you're looking at, this is where you say, all right, this isn't my day, and I'm fine being flat and moving to the next day. So that's another reason we have that abundance mindset of opportunity. And if none of those opportunities happen, we just move on to the next day. So let me know in the chat, Mr. Shag. We got Wags, and this will be the last one here. Boom. In stat low of day, likely to hold. Out of stat high of day, likely to be taken out. Check off the box. Got that one. Haven't been able to reach P12 high. May be taken in New York 1. Check on that one. Most stats below may sweep the high, then come down to get the other side. We swept the high, and we have that true cloud scenario right here, higher until 11:20. What time are we coming up at it right now? It's 10:39. You're still correct, actively correct in that analysis. And then so scenario 1, 9:30 long equals target 0.1%. Wait for the continuation or reversal to confirm. So boom, Wags, if you're listening, let me know in the chat if you got this trade because you mapped it out beforehand. We had 0.1% off market open for a cash flow long. Basically took the same exact trade for scenario 1 with Wags here. Scenario 2, you were looking for shorts, but we never got that. And then scenario 3, if 9:30 is indecisive, we wait for the P12 high or P12 mid to show rejection. And there we go. So you got scenario 1. So see, even Wags, he gave himself 3 scenarios. One of them actually played out, which was a break above market open for cash flow 0.1% targets. You take your cash flow and move to the next day, baby. So those are some PAC members doing their war game, practicing, showing up for their business every single day, no matter if they're green, red, or flat. All right, let's see. Oh, the restream just completely reset my chat. I can't see anybody. Oh. Here we go. Here's Chitaki. Done for the day. Nice 9:30 long. Good job. Have a good night, Chitaki. Travis. Oh, here's Wags. Bad day for me. Following my scenarios led to a win on 9:30, but 2 full loss. Okay, so what happened with the losses, Wags, if you want to talk about it? Oh, dang it. I didn't want to bring that up. How do I switch? What does this do? What's this button do? I don't know what this button does. It's not letting me do anything.
Which button?
I don't know. When I hover over the comment, there's an eyeball that hides it, but then there's another button. but I don't know what it does.
Oh, the hide just takes it off.
No, the other one beside the hide button.
I don't see it.
Yeah, it's looks like a wheel. I don't know.
Oh, the star?
No.
Weird.
It's right beside the eyeball. If you don't have it, you just probably don't have it. I don't know.
Yeah, I should have the same thing as you. That's weird.
Glockman. What's up, Glockman? I'll get to it. Let's see. Glockman, I just signed up for the boot camp. When do I find out when I'm accepted or not? I'm up on the day. Thank you. Nice. Good job, Glockman. Justin should be accepting you. Justin, are you accepting like periodically as people?
No, the first ones were some errors with WAP. So right now we're just kind of a holding pattern. So you'll get charged kind of that $1, but you're not actually getting charged it. So you'll be let in closer to October 18th when we go live, maybe a week or two beforehand, just to give you guys a chance. I will be loading, and I already have loaded some videos up, so you can kind of get a little ahead of the game on WAP. Get yourself kind of familiar with what you're going to be talking about. Get a little foot in the door with that when you get accepted. And then kind of go from there.
Okay, cool. So do we have any content or any channel for the people that are waiting right now? Kind of like how
we can go ahead and start letting people in if they want, to be honest. That was sort of my talk with you guys. So we need to chat just about a couple of ideas I'm thinking about to make it a little bit more seamless for people who maybe come in between ones like this. But we just haven't really set that up yet. But if people really want in, open up a ticket, DM me. We can kind of get you some early access to get caught up. There's a few people that are in that mode. So people that are here especially, open a ticket at me and we'll happily have a chat.
Yeah. And the basic thing, honestly, Glockman, and this goes for anybody that's signed up right now kind of waiting, is we have to do this in 3-month cycles, because we're trying to take our time, and instead of just pushing y'all saying, hey, look, this is the content, you go and do it. Good job. Hope the best for you. Instead of just doing that, right? We actually work with you guys. Like Mickey and I and Pocket, we literally are trying our best to, like, through each of the phases, like accurately explain it well. We have homework with everything. So that way you get you're paying to be there, right? It's $100 for the 3-month process. You might as well get your money for it and actually invest into trying to take this serious. So it's kind of like weird. I get it for like that. If you join the wait list and now you got to wait like a month, but that's how we do that. So that way when it comes time for you to join, you get the same level of attention that the previous class did. So in this kind of like limbo period, what I will tell you is we do these free live trade sessions every single month. As long as the market's open on Monday, we're here. The other thing is we do re-engineering sessions at the end of the day. So I would suggest every single day, 4 p.m. EST, try your best to show up as many as possible. Just that way you start to get in the rhythm of understanding the terminology we're using. You'll start to understand what a New York 1 is, what day classification means, all these things. You'll start to already understand that. So that way, day 1 of the boot camp, you're not now trying to just learn, what a New York 1 range means or what is long false. No, like you'll have those basic level understandings, and then you just start to build on it. So we'll try to find a happy medium. We got a couple talks. Mickey and Justin and I will have to hop on in just a couple meetings. I actually, hold up, I have a meeting here soon, so I'll have to probably wrap this up. Thank God for Google Calendar, because I just got an alert. Yeah, I got a meeting. Oh, I got a little bit more time. Okay, cool. Forgot about the time changes. There we go. So what I was saying, so Glockman, yeah, I hope that answered your question. So for now, and also there's a free EDU section on the Discord. If you go into the Discord there under the channels, click on the free EDU. I don't just post in there just to post in there. Anytime I make a tweet or something that I think could be valuable for you guys, and I want to like archive it for anybody to go back and look at, I'll ping the entire Discord saying, hey, I just dropped this in there, and you can go back and reference it at any point. So it's not just every tweet I ever post. It's just tweets that I post stuff in that could add value to you. So if you kind of also want to get familiar with that, just to, again, kind of see how we run things, what we look for, go in the free EDU channel, consume all the freaking content there. So we got tons of content that you guys can kind of just go through and slowly just practice from now until October 18th. EP, what's up, EP? EP said 9:30 was good. 10 o'clock 05 break was stopped out. Re-entry at 9:30 rejection. Long bias for the session. The last boot camp member joined. Learn. Last boot camp member joined. Learn to read. Oh, you were yeah, EP. Yeah, I got you. Yeah. EP is actually just about to graduate this current boot camp, and I'm very excited to see where you end up in the next year or so, EP. That goes for a lot of you that's been in the group for a little bit now. But that's good. That's really good. It's okay to get stopped out. You get stopped, you reevaluate, and there you go. So it looks like you got a couple really good trades there, EP, with risk managed. Wags said, I exited my long when we got the reversal signal at 10:15. So let's go on the chart here. So you exited around 10:15 right here. And then we turned around and went up again. Okay, I can see it. I totally get it. I mean, this wasn't the most clear and cut market open because we had this potential long false high of day. So I get where if you were managing risk and wanted to pay yourself, this isn't a bad area or time to pay yourself because we did make that high of day and we were starting to reject it. And this is where really, Wags, and this goes for anybody, you just let your risk do the worrying. Really, I'm being dead serious. We proved that even again today. Like, you guys watched me take this trade. I was targeting 0.12%. Look at this. In 2 candles, we climbed and went almost to my TP. And then we came all the way back down. I mean, I was in drawdown here. And this very well could have been the high of day. But, guys, I don't trade to be right every trade. Do you guys understand the mental exhaustion that it would take? And you guys know this, right? I don't have to say hypothesize about it. We all experience it. Like, think of the past quarter. Every single day you take a trade, and every single trade you take, you are stressing that has to be correct, that has to be the one that hits your TP. And then if you were able to quantify that stress and like put it in a jar, how much stress would you have? How much freaking of stuff in that jar would be filled up to accurately show and replicate the amount of stress you've endured in the past quarter? And I would say a lot of people, that's a lot. So how can we reduce that jar? How can we reduce the quantity in that jar? We just let our risk do the worrying. Did my camera freeze? I think my camera froze. Yeah, my camera froze.
Oh, yeah, it did. It's like I wasn't watching that part of it.
I think, oh, man, do we have the same issue my old camera had?
There's no way.
Well, let's see. I turned it off and turned it back on. And it's still not coming on. Dude, do you guys see why these little things right here is why I hate streaming so much with cameras?
To be fair, you went a really long time without any issues, so.
Okay, let's see. So it's turning back on. Are we going to get it? Oh, battery exhausted. Oh, the battery died. Never mind. All right, faceless stream for the rest of the stream. You guys can't see my beautiful face. It said the battery's dead. So I got to get one of those plug-in batteries that just connects to power. Okay, but I hope you guys get the point of what I'm saying, right? Like, just let your wrist do the worrying. I get it. There's a lot of trades you could be like, yeah, I managed the trade, and thanks to where I got out, it ended up being a profitable one instead of a losing trade. But remember, guys, we don't care. We are trading to be right about for a life. I even dropped this on Twitter yesterday. Jesse, is it Livermore? Is that how you say his name? From Stock Operator. Yeah, Jesse Livermore. He says, if you depend on rules, you can be wrong on a single trade, but right across a lifetime. Like, really think about that. You can be wrong in a single trade, but right across a lifetime. That is exactly what we try to tell you guys each and every day. It is okay to lose. It is okay to watch your trade go a few points to your TP and then reverse and then go into drawdown. It's the fluctuation of the market. The market does not operate on your schedule, doesn't operate on your TPs. It operates on historical relevance, right? And we can quantify what it does historically more than it doesn't, because it's right here, free information for anybody. So I don't have to be perfect. I don't have to sit here and say, if we go into drawdown and we do this and we do that, I'm going to close it out. Because now what do? If I limit myself, if I say I'm going to overmanage this trade, and just because I'm dictating a trade based on my P&L or because it's red or whatever, I'm going to overmanage this trade, and I'm going to do what? I'm going to skew my expectancy, because the expectancy that I calculated for my edge is not based off of overmanaging a position while the trade is live. My expectancy is based off of, this is the entry, this is the invalidation, and this is the target that I've set for the day. And so the moment I change any of those variables, the moment I change when I get into a trade, the moment I change how I exit and manage my position, the moment I change any of that, I'm skewing my long-term expectancy. And you don't know if that expectancy is positive or negative. You just know you're skewing it. So please understand that when we go to manage a trade, we're managing a trade based on logic, because of what we have definitively telling us is objectively true, which is your statistics and your data. And we let everything else, we let the cards lie where the cards lie. You will still go into losing streaks. You will still have red days. You will still have red weeks. But the difference is you have quantifiable numbers that tells you that over a long period of time, you will still experience some mean reversion. You will still experience some drawdown, but you will snap back because you have something that you can quantify. And it's a lot easier to go through drawdown and still execute consistently when you're red, when you know that the numbers and the things that you're relying on is objectively true, than if you're trading off of discretion, if you're trading off of something that is just hopes, or you think or you feel as if price is going to go to XYZ. Because when I'm in drawdown, I get to rely on objective proof. When somebody else is in drawdown and they're relying on, they feel like this is going to happen, they feel like this is going to work, they think this is going to work, who do you think is going to make it out the other side of drawdown, sticking to the same plan and sticking to the same consistent execution, versus switch up, change the way they trade, overmanage the trade, switch to another strategy, or, so on and so forth. That's why we trade with statistics. It's not to win. It's not to predict. It's not to do something extraordinary on the chart and say that we're the greatest of trading. It's to be able to lose effectively, so that way we can execute consistently. That is why we use statistics. Ryan. What's up, Ryan? Even though scenarios were wrong, it adds calmness when reading live price. Green Day, Austin. Nice. Love to hear that, Ryan. Love to hear that. Love to hear that. Because I'm being serious. It gives you that sense of calmness, right? And that's exactly what you failed to the level of your system today. You said, these are the scenarios I want the live price to see. And then you readjusted as the market printed, as live price printed. and it gave you peace on the charts. You said, okay, well, I'm not getting this, but then now, if then, playing chess, not checkers, if this happens, then what is this going to do? And just constantly thinking, if then, if then, if then. And that objective thinking allows you to not have to react to price, react to every wiggle on the chart. Every single time a candle prints bearish, you're not just instantly thinking bearish. And every time a candle prints bullish, you're not just instantly thinking bullish. You're operating off of an anchor of objectivity. And that's what gives you peace in the charts. I'm not reading that, Scott. I saw the continuation long stayed above 0.1%, so I exited when 10 o'clock Q1 low broke and went short, and then we turned around and went back up again. So that just shook me. Okay, I get it. I get it, Wags. And also, Wags, I'm pretty sure you target, I could be wrong, but you target pretty larger targets, right? So you're in a trade a little bit longer. Scott, his mom. Let us at them. We'll take care of the nudes. Chris George, have a great day. Done for the day and positive on several funded accounts. Nice. Good job, Chris. Mr. Daily Profiler. Davis Anafi, can you keep this live stream? Yes. Anybody that's currently tuned in. By the way, if you guys got value, please hit the like button. We've gotten 65 likes and we have currently 67 people still live 74. So we got 74 people live with us. So if you haven't yet and you got value, click that like button. I don't actually know if it helps the video, but it doesn't hurt the video. So it helps us get out to as many more people as possible, if it does, to just show objective trading. Yeah, you've been picking your nose for 5. Dude, I'm picking. Oh my God, you guys, I still have my finger in my nose. You guys can't see it now. My battery came in clutch. I was saving it. Exactly. Champions don't win every game. Dude, we know that, right? We talk about the cliche, look at the NFL players, NBA players, all these crazy, how many shots do they take and miss? Mickey brought this up, I think, the last Monday live trade session we did. How many times do you see a basketball player take a shot, or a soccer player take a shot, or whatever, right? Oh, I said soccer. I meant football for all the other people. But how many times do we see these professional athletes take an attempt and miss or lose? They do it all the time. It's okay to lose, but they have a system that they fall back on. When they lose, they shake it off, and they have a system that's going to get them right back in the game. Doesn't destroy them. Unless they are the 90s Chicago Bulls, Mr. M-Dub. Great work today, Pat. Now, M-Dub, you do great work. M-Dub's been in the pack since inception almost. Killing it. Yes, I was aiming for previous day. Oh, yeah. Yeah, so you're fine. Previous day high up here at 902.50. So you have a very clear target. And if that's part of your plan, Wags, I don't know 100% of your business plan, but if you want to pitch it, you should get on the schedule, and Mickey and I can look at it. But either way, let's see. Let's break apart the 10 o'clock hour. If that's a part of your plan on just, managing your risk, if the Q1 of the 10 o'clock hour, let's say, disagrees with the overall intended direction, it is what it is. I would say, and I don't want to overfit or overanalyze just because you lost a trade or whatever, that you did anything bad. You managed risk. Nothing's bad with that. But when we're above market open, right, and we're not even making an attempt to get back to the other side by 10 to 10:15 this time right here. Remember, time is on your side in terms of favorable price movement. And so just because maybe we're making a, like in this case here, a Q2 at a statistic low, live price is still being accepted above market open. And that market open, I'm telling you guys, if you want to be on the right side of the daily candle, one very stupid, simple thing you can do is just, are we above or below the RTH open? That's it. Because this RTH open is the major pivot of most days. This becomes the major pivot of, are we going to stay above it or are we going to stay below it? Or do we range, right? And you guys can see this. If I just zoom out and look at the market open range, this was the high. This was the low. This was the low for this run up. This was the high for the run down. But either way, this was the major pivot point. This was the low. This was the low. This was the high, right? So it's a major pivot point. Or if we're going to chop, this is most likely where we're going to chop. So when, just because we're doing something in this 10 o'clock hour that may be, we're taking the high or the low of Q1, there's still something to be said of the fact that we're not even making motivation to come back to market open, below market open, but then we're also not even coming anywhere close to taking these statistics. And so if we know that the Asia OU gets retraced more than it doesn't, and then we also know P12 mid gets hit more than it doesn't, and by 10 to 10:15, especially 10:30, we have failed to get all the way down to here, and we have an instat low of day. This is what I was saying this morning. We could basically take a giant black box and just say, this part of the daily candle has already done what it needs to do, and I'm not expecting price to do anything by 10:30 down here. And if it does, this is just out of the norm of what it typically does, right? Because typically we would have retraced P12 mid by now. We would have retraced these opening prices 1 and 2 by now. We would have came down here to potentially make a new low of day by now. And so we can just discredit anything right around here. And especially so much so if we can't even get back below market open. If you are green, stop trading and go touch grass. There you go. You pulled your cash flow out, baby. Go have some fun. Do something crazy. Yeah, I lost sight of that. My full stop was on the bottom of 930, but when we broke Q1 low, Red Wolf tapped bottom. Okay, I get you. I get it. And listen, dude, in another world, if that's a part of your plan, in another world, you would have been right, and then you would have been short from here to the downside, right? Because we go false more than we go true. So in no means am I saying you did anything wrong. I'm just giving you my unwarranted 2 cents. And maybe if you're red too. Yeah. If you've done all the trades that you plan to do and you're red, that's fine too. Go touch grass. Good job. You manage risk and you can now live to trade another day. Absolutely, man. Do we have any other questions? I think this was a really good stream and a really good time to wrap it up. One last time, if you haven't joined the boot camp and you would like to join it, there's the QR code right there. Join the pack boot camp. If you haven't joined the Discord, there's the Discord link right there. Join the Discord. We do free live trade sessions every single Monday, 8:20 a.m. EST. Re-engineering sessions 4 p.m. EST, Tuesday through Friday. Like the stream if you got value from today's stream. And then the boot camp starts October 18th, next month. Join the wait list. And that's about it, ladies and gentlemen. If you're red, go touch whiskey. All right, ladies and gentlemen, I hope you all have a wonderful, wonderful, wonderful rest of your day. Really cool first start to the live streams that we're going to be doing from here on out. And with that being said, stay grinding on your freaking goals and never, ever let anybody tell you that you can't do something they've never done themselves. And I'll talk to you